Hillary Clinton and Donald Trump are on the front page or most pages of most newspapers that we pick up these days, and for good reason. In a short time, one of them will be governing what is one of the most dominant countries in the world, which is no small task. There remains a big deal of uncertainty around regarding the outcome of the election, and I just want to take a couple of minutes to have a look at what it might mean for investors. You might have noticed newspaper headlines shouting share markets are set to soar in the first year of a Republican presidential campaign, or that Democrats are going to put the brakes on the market. But is there any truth or substance to these headlines, and what is likely to be a better outcome for investors? The answer, when looked at purely from a share market point of view, is that it doesn't seem to matter which party wins the election. The most frequently cited paper on this is a 2003 Journal of Finance, in which the authors note, historically, whether a Republican or Democrat occupies the White House has had no statistically significant impact on US equity markets. Similarly, a 2004 paper by the US Federal Reserve concludes market returns don't track which party wins presidential elections. A more recent look at this by William Watts of MarketWatch examined the presidential election cycle and the outlook for this 2016 campaign. His conclusion? In the end, how stocks perform in an election year might have less to do with the candidates than the economic backdrop that will frame the battle. As you and I both know, financial markets don't like uncertainty, and in order to set prices correctly and efficiently, market participants like to know who is in charge and what the rules are. So in the lead up to elections, share price volatility often spikes, but this is largely due to uncertainty. Once the election outcome is known, markets have a clearer direction on future policy and legislation and will carry on setting prices in a more normal fashion. Now, neither Hillary Clinton nor Donald Trump would be where they are today if it were not for capitalism. So to me, it would seem highly unlikely that either of them are going to implement sweeping changes that would have a negative impact on the US economy. So there will continue to be political and social uncertainty in the lead up to November the 8th, but there is little evidence to suggest that the future profits of companies that operate both here in Australia and globally are going to be materially impacted by whoever is sitting in the White House come Christmas time. And so what's my tip? Don't get too caught up in the 24-hour news cycle and carry on investing.